Hello everyone, this is CA Devang Kothari here and welcome to another episode in my series of Costology. Costology is my series of short videos where we talk about certain interesting terms in costing. Yeah, we'll cover interesting terms in a very short period of time. Now, before I proceed to my interesting term for today, let me make some important announcements to you. Important announcements that my regular batches for costing for CA final have already started on Unacademy. They are already running on Unacademy platform. You need one subscription to attend the regular classes. You will get free classes, but for regular classes, you need one subscription. One subscription gives you multiple benefits. You can attend live classes. In case you miss the live class, you can also watch recorded sessions. Unlimited number of times you can watch the recorded sessions. You will find multiple educators for every subject. For costing subject, I prefer you select me, but you will find many more educators also there. Doubt solving sessions are there every week. Mock test series are also there. Yeah. Now we have also launched an iconic program for CA final students. Iconic is a premium subscription over and above the plus subscription. Under this premium subscription, what do you get? Well, here you get a live mentoring platform. Live mentoring in which there will be one-to-one doubt solving. There will be an expert who will be appointed personally for your own doubt solving. You'll also be given evaluated test series. Test will be conducted and the papers will also be checked. Printed copies of the books will be given to you, and you will have all the routine benefits of plus classes. Routine benefits like live classes you can attend, weekly test will be there, study materials will be given, unlimited access you will have, and the biggest advantage is that there will be structured courses. Yes, in case of free classes, there are assorted topics that you get, but in case of structured course, you will have a proper syllabus completion batch that you can follow. Yeah, the test series will be conducted in three stages at 40%, 80%, and 100% syllabus completion. Each there will be a test conducted. After every test, there will also be an analysis class which is conducted where the paper will be discussed, and after that you'll also be given feedback regarding your performance in the test. Okay, the pricing for iconic subscription goes like this. You can use code YESHAS live to get discounts on your subscription. Group 2 pricing goes like this, and you can also go for combo subscription, group 1 plus group 2 combined. Again, you can use code YESHAS to get discounts on your subscription. Well, currently we are running a scheme. Currently we have an offer running which is only up to 28th April 2022. Yes, up to 28th April of this year, up to 20th April 2022, we have an offer running where you will get 20% discount on all your subscriptions. Plus an iconic, all subscriptions, 20% discount you can get. Use code YESHAS to get 20% discount on your subscriptions. It doesn't get better than this. Yeah. So get your subscriptions today and start enjoying the live syllabus completion batches on Unacademy. Well, coming back to our term for today, my term for today that I will be covering is a term called overall break-even point. Now you might know what is a break-even point, but there's a concept called as overall break-even point. I'll show you when is this applicable and how to calculate. See, there are two concepts under overall break-even point. You can calculate overall break-even point either by ratio method or by stepwise method. Ratio method and stepwise method. When will each method apply? Well, ratio method is applicable, for example, when the company is having multiple products. When you have multiple products but fixed cost is common, how to find break even point? Follow the ratio method. When your company you are having opening stock during the year, one product only, but you have opening stock as well as stock produced in current year, then for calculating break even point you need a stepwise method. So first let me differentiate when to follow which method. In general, ratio method is followed when you have more than one contributions but the fixed cost is common. Stepwise method is also followed in the same situation. See the situation. Stepwise method is also followed when there is again more than one contributions and the fixed cost is common. See, when I have multiple products, every product gives different contribution, But all products are produced in the same factory, so fixed cost is common. Same way, when I have opening stock and current year stock, two separate types of stock, then again for both these type of stock, my contribution will be different, but the fixed cost is still common. So both these methods are applicable when you have different contributions but fixed cost is common. However, ratio method will apply when these different contributions are earned together at the same time. Well, if you have multiple products in the company, can I sell all these different products at the same time? Yes, all products will be sold together depending on how the customers demand. But if my different contributions are coming from opening units and current year units, generally will I sell them together? No. I will mostly sell the opening units first and then I sell the current year units. You see, so in this case, when opening stock is given, then these different contributions are not earned together, they are earned one after another. Stepwise method is applicable when different contributions are earned one after another. So it is earned stepwise. While ratio method is applicable when different contributions are earned together at the same time. Now if different contributions are earned at the same time, if so many different contributions are earned at the same time, so you should be given a ratio how these contributions are earned, ratio how the units are sold. Ratio must be given, so I call this as the ratio method. However, in this case now, if the contributions are earned one after another, then you don't need a ratio to be given. Instead, I will say sequence must be given. Sequence, that which contribution is earned first and then after which contribution is earned, because different contributions are earned one after another in a sequence. So what is that sequence? That sequence should be given to you. Yeah. Okay, so under this situation, ratio should be given, and when the ratio is given, you follow ratio method, and when sequence is given, you follow the stepwise method. Now how to follow that method also, let me tell you. If ratio is given, then simple, you first start your calculation by assuming a number of units equal to the ratio. Yeah, you start your calculation by assume number of units equal to the ratio, and then you cross multiply that. If these assumed units is giving so much contribution, then for recovering the total fixed cost, how much units will you need? That answer is called as my overall break even point. While on this side here, how to calculate on this side, if sequence is given and stepwise method you have to follow, then you need to calculate a break even point in stepwise manner. So for calculating a break even point, first you recover fixed cost from the units that are sold first. Say opening units are sold first, so first recover fixed cost from the opening units, and then what remains unrecovered, because all the opening units will not recover all your fixed cost. So you first recover fixed cost from selling all the opening units, then balance fixed cost is recovered from the current year units. Balance fixed cost will then be recovered from the sale of current year units. This becomes your stepwise method. Done. That same stepwise method will be used when you have opening stock given under FIFO method or under LIFO method, or even when there is no opening stock. You might be given questions where initial units are sold at a different contribution, later units are giving different contribution. Say initial first 100 units you plan to sell at a discount, remaining units are sold at a normal price. So these first 100 units which are sold at a discount will give you lesser contribution, remaining units gives you more contribution. Again, contribution is changing after certain units. You have to follow stepwise method. Ratio method will be followed when you have multiple products or when you have opening stock, but you have to follow weighted average method. You know that in case of weighted average method, opening units and current year units both are sold together as a mixture. So yes, if both are sold together, then again both contributions are earned at the same time. You have to follow ratio method then. Done? Yes, these are two methods of identifying overall break-even point when there are different contributions in the company. I hope that makes some sense to you. For more questions, for more understanding of this topic and to understand more practical questions about this, well, you can attend my live classes on Unacademy. Yeah, that's all. Thank you very much. Until next time, bye bye.